So it's a bit like thinking about your health insurance coverage. If you've spoken to any health insurance company, you see that they have multiple plans. You have a Cadillac plan, you have something less than that. The Cadillac plan obviously covers you for all the major ones. Your coverage amount is going to be higher and things like that. And then you'll have plans that come down and have lesser coverage, but then you pay lesser premium as well. So this is exactly like that. You have to choose what kind of protection you want. Do you want coverage all the way from $615? Or maybe you want coverage from $650, which is even higher than the price that you pay. So let's see what we mean by these things. Or you might want, you might say, okay, I'm willing to withstand the pain if Google drops up to 575, but if it starts dropping below this support point, say for example, which is at about 565, 570, if it starts going below that, then I'm concerned that it'll go all the way down to 480. So I want protection from this point onwards. So basically you can choose your point of protection. You can choose it to be above where you bought the stock. You can choose it to be exactly at where you bought the stock. You can choose it a little bit lower than that. You can choose it here, or you can choose it here. Obviously, the cost of your protection is going to reflect this choice that you make. Your protection for the 650 level is going to be very high. That's like full coverage for everything. And at the price you paid for it, that's going to be less than the 650, but this is also going to be somewhat expensive. The 575, the 570 may not be as expensive as these options. And finally, your 480 is going to be the cheapest. So you have to choose at what point you want protection for your stock. And once you choose that level, and let's say in our case, we're going to choose 590. 590 is below where we are, but we are willing to withstand some pain. If Google goes down to 590, I'm not going to panic. But if it goes below 590, then I don't want to lose much more. I want to protect my stock. So let's look at Google Options and see how we can do this. Here is Google Options. And the other consideration that you have to give is, for how long do you want this protection? Is your concern about Google something in the near term? So which means, in the next 49 days, or is it something a little bit longer than that? Then you'll have to go into the September options, which has 147 days to expiry. So, or you're concerned about something that's happening right now, so in the next 7 days or 10 days. So in which case you can buy protection at the May series, but remember, the closer you come and you're going to be buying a put option for protection, you're going to lose on time decay. So even if you actually are concerned about the next few days, I would buy protection at the June series level, because you're not going to lose on your option due to time decay as much as you would in your May option. And even if your fear subsides and whatever crisis that was going on is over, then your June options will still have extrinsic value, a fair bit of extrinsic value, because there is still time left for that to expire. So all in all, I wouldn't go too close to expiry. I would either pick the June or the September. In our case, let's just pick June and see what it is. Because the more further you out, that's the other negative. If you go to September, the September options are going to be much more expensive. So which means your protection is going to be much more expensive if you want to protect it until September. But if you just want to protect it until June, your cost of this protection is going to be much less.